All right. All right, so I haven't been trading the last few days because of the holidays. So I want to get on and do a backtesting session on FX replay here. I actually did trade today. I took a trade at the beginning of the day, right at market open. It wasn't my traditional trade or my traditional setup, but I was just trying to pass an Apex evaluation account super quick, and there was a lot of low resistance liquidity built up, so I just bought once I seen a little bit of buying pressure and passed that fairly quick. I do not trade like that any other time, but just because of the live trailing drawdown on Apex, I find it beneficial to trade at high volume times rather than sit through an entire setup, have your balance go up to 1,000 and then come back and stop you at a break even, and have $1,000 less of drawdown to trade with on that account. So passed that quickly this morning, but didn't bother doing a trade recap because it wasn't a trade really. It was just buying into the market when there was a little bit of buying pressure. Like I said, would never trade like that on the actual live account. Anyway, wanted to clarify that and get into this backtesting session. So I would start on the raw charts. I have the S&P 500 on my left and I have NASDAQ on my right. I always trade like this, looking at both of them, having them synced up so you can see exactly what happened at this time on ES and vice versa. So anyway, I usually do top-down analysis, so I would check the weekly time frame here, see what we're trading into. So immediately I see this weekly intermediate high. Oh gee. Which is just this high, which is resting in between this gap. And we have the exact same weekly high, or weekly intermediate high on the S&P. So I'll also mark that. And there's nothing else within this trading range here that I really see on the weekly time frame. There's this gap up here, but I know that wouldn't be traded into in this one single trading day. So then I'll go down to the daily. Always adjust this because of OCD. All right. So on the daily, you can see this daily intermediate low here, resting inside of this gap. So mark that. And this is not a daily intermediate low on ES because these two wicks, this one and this one, overlap, so there's no gap in this candle here. Excuse me. And to the upside, this daily gap here, since we traded into it here, didn't close through it, and we left this high. That would be a daily intermediate high. And we haven't traded to it yet on ES, as you can see here, but we already traded into this. No, I'm wrong, we didn't. So that's untouched on ES. But since we took it on, or since we traded into it on NQ, that would be an SMT. So there to there, I have a large bearish SMT. Alright, and that's pretty well all I can see in this range on the daily time frame. So then I go down to the 4 hour. And on the 4 hour, you can see that this large gap here, we traded down into it right here. And created this 4 hour intermediate low. And on ES, we formed a newer SMT than this one up here. Ooh, nope, SMT. This is a 4 hour intermediate low here, but this failed to sweep out this low here. So that's what formed the SMT. I'll also mark it here on NQ. There's also this 4-hour intermediate high. Same with on ES. We haven't closed through this gap here yet. Came very close, but we just put in this 4-hour intermediate high. And this 4-hour intermediate low is still intact because of the SMT. We technically don't need to, 4-hour intermediate low, technically don't need to take this level on ES because we've already taken it on NQ. So even though we're trading back to here in these last couple of 4-hour candles, we could just reverse and trade towards this daily intermediate high or the weekly intermediate high. And that's about all I see on the 4-hour here. Yes. So in a scenario like this, where the SMTs are both there, I look to take the newer formed SMT with more significance, meaning that this one was formed here, swept this high at 10 o'clock Friday, May 2nd, 2025, and then this on the same day, or May 6th actually, sorry, May 6th, 2025, we swept this low. And so this would be the newer formed SMT, and this would be the older one. I still like to mark out both of them, but this would be the newer one, so as you can see, we're reacting off of that. Then would go down to the 1-hour. This would then be a 1-hour high, 1-hour intermediate high, as well as this. And I would also probably want to mark out this large 1-hour bearish gap. Even though it's mostly traded through, I'm starting the trading at 9:30 Eastern Standard Time, which is when New York Stock Exchange opens. So I'd like to mark it there to see whether or not we respect this 1-hour gap or if we disrespect it. Because if we disrespect it, then I would imagine price to trade lower towards this 4-hour intermediate low. That's about all I see on the 1-hour. So then I would go down to the 15-minute. And I don't really mark anything out from the 15-minute. There would be a bunch of 15-minute intermediate highs and lows. So now from the 15-minute, I would, well, first, I guess, on the 1-hour and the 4-hour, I would determine a bias, see where the market's been trending. So obviously, we've been trending up for the last couple of weeks, really. And then on a lower time frame, we've kind of just been consolidating in this range here. But yes, overall, I would have a bearish or a bullish bias going into this day. But I'm never married to the bias. I'm always willing to change it up, and if the right circumstances present themselves. For an example, if I was bullish going into this market here, and we've seen NQ go up and take out a couple of these highs, where ES consolidated and failed to take these highs, and we put in an SMT up here, which would be newer than this one, and we started to see displacement down towards these lows, then I would be willing to enter a trade in that scenario to the downside. Not always only looking for longs or shorts if I go into the day with a set bias. I try to be reactive. So, like I said, down to the 15-minute, and the first thing I would do is play the candle out. And that is the first 15-minute there. Let me adjust this here. And at this point, 9:45, in 15 minutes, we would see the 1-hour close and the 4-hour close, so you get a better idea of the direction for the day. So at this point, I don't see anything that I'd be willing to enter, so I'll like to see another 15-minute candle. Trying to simulate a trading day as much as possible. So at this point, we have respected this 1-hour low, or this 1-hour bearish. Oh, this is a bullish gap. I don't know why I marked it as a bearish gap. Anyway, that's insignificant. But we respected this gap, so I would take that away and then mark it out as, let's check the 4 hour as well. It's not a gap here in the 4 hour, but this would be a 1 hour intermediate low now. So I'd mark that out on both the charts, 1 hour intermediate low. So this confirms my bullish bias that I went into the trading day with even more, that we respected this 1 hour gap, and we are now trading back up to these highs. So at this point, I would go to the 5 minute and see if we can get a gap to open up and trade back to, because that's all I trade. A lot of people would like to call them continuation trades. That's one name for it. But basically, let's see if it presents itself, and then I'll explain it. So in this scenario here, this next 5 minute candle here, on ES, it's a very insignificant gap here, but I would still mark that out on both. Oops. This is a 5 minute bullish gap as well on ES. And basically, sorry. Basically, what I'd like to see here for my strategy to play out is trade back to this zone and then trade out of the zone. And my requirements for entering this trade, if we do trade back to this green box here, is I would like to see an inversion, the highest time frame inversion between 30 seconds and 5 minutes, back out of this zone. And in most cases, I would like to see I would go break even at this internal high, and then I would target the next 5 or 15 minutes. So in this case, this would be this 5 minute. And so since it was already traded back into, I would target the 5 minute intermediate high here. So we might not even trade back to this 5 minute, but we will go down to the 1 minute and play it out to see what happens. All right, instantly traded into it. And so the highest time frame inversion, there's not even a fair value gap down to this gap that has been formed yet. So then I'd play another minute out and immediately get the bounce off of that. So you can see here that the highest time frame gap that we have of the leg that traded back to this 5 minute gap that I would call the manipulation leg was a 30 second. If you go to the 1 minute, it was completely closed up, the candle after we moved down into the 5 minute. So on the 30 second, we did have this small gap here. And immediately, 30-second bearish. So immediately, after we formed this 30-second gap here, closed right through it, which is a great sign, what I would call a V shape, out of the 5 minute gap. So it's a good sign of momentum out of the gap, and I would enter this trade with my stop loss at the internal low here. And like I said, this was the 5 minute intermediate high here. So I would then target that. And I always look for at least a 1-to-1 risk to reward ratio. You can see here it's 1.11, so it's not the greatest risk to reward, but anything over a 50% win rate using a 1-to-1 risk to reward ratio would keep you profitable. So like I said, I would go break even here, and unfortunately I would also have to go break even here on ES, because if ES took this level, the high, the internal high, while NQ didn't, then we would form a very small SMT at this high. And although it's not a significant level, I would still like to go break even, because there's been many trades where I've seen NQ take a high or ES take a high while the other failed to, and reversed. So as soon as I see ES take this high, whether it's NQ or ES first, I would then put my stop at break even. So now to enter this trade, I would check this tool to see how many points I'm risking. So it's 25 points. I would then go to my sizing chart that I made on Excel here, and in between 20 and 30 points, I'd be wanting to risk around $500. So I would want to risk 11 contracts. It'd be between 440 and 660. So it would be 550 if I was risking 25 points. Back here, and I would enter with 25 contracts. Or no, I'm risking 25 points. I want to enter with 11 contracts. And I would buy. And I would go down to the 32nd to play it out, because that was the inversion. So let's see how this trade goes. All right, very first candle, both on NQ and ES, we took the high. This is a pretty bad spot for break even. It doesn't give price much room to breathe, so could very quickly get stopped out at break even. You can delete this. So now this stop is completely at break even, so simulating this trade, I would be risking nothing now, and immediately stop me out at break even. All right. So that would have been 0 profit made and 0 profit lost. And if we continue on here, so now if price were to resweep this low and we got another inversion out of this range, then I'd be willing to enter. But now, since we took this internal high on both assets, I would not want to re-enter unless we got, like I said, we reswept this low. So now, moving forward, the only other entries that I'd be interested in here are if we gapped up and made a new 5 to 15 minute gap open up and trade back to, and I would take the exact same model that I just showed you there. So we will play this out. So unfortunately there you can see my stop was here at the low, and my profit, or my take profit, was up at this high. So if I hadn't gone break even, then this trade would have hit. Something that I am currently journaling right now to see whether or not it's worth it for me to go break even. But so far it's proven me right to go break even at the prices that I do. So we've just consolidated for the last while. So we obviously didn't come down and resweep this low, so I'll go back to the 5 minute to see if any new gaps present themselves. Nothing yet. All right. Interesting here. So now, excuse me, I'd like to see the highest time frame that this gap is still present. So it's still present on the 30. And this was a 1 hour gap that we formed here. So we now just traded into this 1 hour gap, and we are obviously respecting this gap. We're displacing heavily to the downside from it. And if this, whoa, all right. I was going to say that if this opened up a 5 minute gap here and we traded back to it, then I'd be willing to take it down to the 1 hour intermediate low, but price ran it in 10 minutes. So now at this point, I would be willing to, or I would like to see price react from this 1 hour intermediate low and possibly get a long to the upside. So nothing so far. Just consolidating. And that's it. The time is now 12 o'clock noon Eastern Standard Time, and I only trade from 9:30 market open until 12 o'clock, which is the lunch hour for the stock exchange. So it's typically low volume. And you can see the volume really fell off here in this range after we got this heavy displacement to the downside. So there were no winning trades in this session here, and that's going to be it for this back testing session. Definitely want to do some more of these for my own good and for the for the sake of posting them. But that's it for now.